$42.7 billion for Hellmann's mayonnaise and some bouillon cubes.
It's the Spice King eating the Condiment King, Maya. The ultimate pantry consolidation. Plus, it proves my point. Mega deals are officially back.
A single quarter doesn't make a trend, Nate.
$1.2 trillion in Q1 says otherwise. Bankers are bored, balance sheets are heavy, and they want to shop.
Or they're just rushing before the geopolitical headwinds actually hit. But fine, show me the math on this Unilever raid. The rundown, $14.2 billion for half a fab they already built.
Intel is just aggressively hitting Kroll Z on their joint ventures right now. Buying back that 49% stake in the Ireland facility is a massive flex. But man, it's an expensive flex.
It's a staggering number. They spun it out to get cash, and now they're buying it back. Speaking of private equity flips, Apollo just offloaded Sapphire Gas Solutions to Antin Infrastructure Partners.
Apollo's cleaning house this week. But can we talk about the real tragedy here? Danone buying Huel for $1 billion.
Why is that a tragedy? It's a smart portfolio expansion. Danone needs high-margin protein, and Huel has a massive direct-to-consumer footprint.
Maya, it's beige sludge. The tech bros are going to be absolutely devastated that their optimized nutritional paste is now owned by the same corporate conglomerate that makes Activia yogurt.
I'm sure they'll cope just fine. The numbers make total sense. $1 billion is exactly what you pay for a dominant brand in a stagnant grocery aisle.
Fair enough. Gilead is also writing big checks. $2.2 billion for Ouro Medicines.
T-cell engages for autoimmune diseases. Oncology gets all the glory, but immunology is where the quiet money is printing right now.
Which perfectly fits the whole mood of this quarter. Look at the macro numbers we just got. Global M&A hit $1.2 trillion in Q1, a 26% jump year over year. The sell-side analysts are saying confidence is back. Mega deals are back.
I don't buy the pure confidence narrative. Yes, the volume is up, but look at the friction. If you look at the actual deal timelines, executives are quietly dragging out due diligence. It's taking weeks longer because of geopolitical tensions in the Middle East. Volatility is the new baseline, not confidence.
I disagree. You don't hit 1.2 trillion by being overly cautious. European dealmakers are absolutely crushing their Asia Pacific and North American counterparts right now. They're just pricing the volatility in and pulling the trigger anyway.
Pricing it in and ignoring it are two completely different things. But if you want to talk about aggressively pulling the trigger, we need to look at the absolute monster sitting on the board.
Oh, we definitely do. $42.7 billion.
McCormick trying to swallow Unilever's entire food division. Let's look at how Unilever's boardroom is actually going to respond to this. The big one.
$1.2 trillion in a single quarter. I had to refresh my terminal 3 times this morning because I thought the data feed was broken.
It's not broken, but it is incredibly top-heavy. Yes, global M&A is up 26% year over year, but if you look past the headlines, the middle market is still crawling. Everyone keeps quoting this return of confidence narrative. It's really just a handful of massive balance sheets throwing their weight around.
Okay, but you can't ignore the weight they're throwing, especially when 42.7 billion of it is going toward mayonnaise and bouillon cubes.
The McCormick and Unilever deal.
The condiment war of the century. McCormick wants Unilever's entire food division. It's a brilliant, aggressive play. They get absolute dominance in the center of the grocery store. Imagine the pricing power when you control both the spices and the sauces. You own the pantry.
I'm going to stop you right there. Brilliant? Nate, they're offering $42.7 billion. That valuation is completely unhinged. I was digging through the proposed financing structure this morning. They're taking on an absolute mountain of debt to buy legacy food brands.
Legacy brands print cash, Maya. Hellmann's mayonnaise alone is a macroeconomic hedge. Seriously, in a volatile market, food is safe. It's predictable. Volatility is just the new normal now. And companies are figuring out how to execute deals anyway.
Safe until the regulators wake up. You think the FTC and European regulators are just going to wave through a grocery monopoly like that?
They might. It's highly complementary.
It's highly expensive. Plus, look at the broader environment. The whispers I'm hearing say executives are quietly extending deal timelines for months. They're doing deep dive due diligence because of geopolitical tensions, especially in the Middle East. And McCormick just walks in and drops $43 billion on the table. It feels like they're rushing.
It's not rushing, it's opportunistic. European dealmakers are absolutely crushing it right now. They're outperforming North America and Asia by a mile, and McCormick knows Unilever is vulnerable. Unilever's boardroom has to be in pure panic mode today.
Oh, I would pay very good money to be a fly on the wall in London right now. Do they fight it? Do they try to carve out ice cream to appease regulators?
If I'm a Unilever banker, I'm already calling private equity to see if we can trigger a bidding war. But you're right about the regulatory risk. That is the one massive hurdle.
We'll definitely be watching for competing bids tomorrow. But speaking of massive price tags, McCormick wasn't the only one writing giant checks this week.
Right. From condiments to semiconductors, Intel just dropped $14.2 billion to buy back half of its own factory in Ireland. And I have some thoughts on that math. Voices. I'm reading this analyst note from this morning, and they're calling it a return of renewed confidence. They're saying well-capitalized dealmakers are just leveraging pent-up demand.
I saw that note. I literally laughed out loud.
You don't think a $1.2 trillion quarter shows confidence? That's a 26% jump year over year. The mega deal is back.
The volume is back. The confidence is absolutely not.
They're writing the checks, Maya. Intel just dropped $14.2 billion to buy back half of its Ireland fab.
Sure, but listen to the whispers on the street right now. Everyone is quietly extending their deal timelines. Due diligence is dragging out for months because executives are terrified of geopolitical risks in the Middle East.
But they're still getting to the finish line. Another commentator said volatility is just viewed as a constant now. Companies are executing anyway.
Volatility as a constant is just banker speak for we still want our fees, even if the world is on fire.
Okay, guilty. I've definitely used that exact line in a pitch deck.
I knew it. You can't help yourself.
But look at Europe. They're significantly outperforming North America right now. Danone just dropped $1 billion on Huel.
Wait, really? $1 billion for Huel?
$1 billion for the official sludge of Silicon Valley?
That's incredible. I can't wait to see French food executives pretending to enjoy a chalky vanilla meal replacement.
It's a solid nutrition portfolio play. But speaking of massive food deals, everyone is watching the Unilever boardroom right now.
Oh, absolutely. McCormick throwing a $42.7 billion proposed takeover at their food business is incredibly aggressive.
We're going to see some serious regulatory pushback on that one tomorrow. Spill the tea. I'd pay perfectly good money to be a fly on the wall in Unilever's boardroom right now.
Oh, the panic has to be palpable.
$42.7 billion. McCormick isn't just knocking on the door, they're trying to rip it off the hinges to get that food division.
It's a massive number, but I'm hearing from legal teams that nobody is rushing to sign anything right now. The deal timelines are stretching out.
Just because of the sheer size?
Because of the Middle East, geopolitical tensions have risk committees terrified of missing something in due diligence. Execs are quietly extending deadlines across the board.
I'm pushing back on that. The market is treating volatility as a constant now. We just saw a $1.2 trillion quarter. Buyers are well capitalized, they have pent-up demand, and they're returning to the table with serious confidence.
Having cash doesn't mean you throw it blindly into a volatile market. Look at Intel. They're dropping $14.2 billion just to buy back a 49% stake in their own Ireland fab joint venture. That's pure defense.
Sure, but European dealmakers are still leading the pack globally. They're outperforming North America right now. McCormick knows they have to strike while the iron is hot.
If McCormick actually pulls this off, the regulatory pushback is going to be a nightmare. You can't consolidate the spice rack and the mayonnaise aisle without Brussels throwing a fit.
Speaking of weird food combinations, did you see Danone bought Huel?
For $1 billion. $1 billion.
The tech bro sludge market is officially a unicorn.
I read the press release and I'm still not convinced anyone actually chews their product. But Danone clearly wants that millennial nutrition money.
I respect the hustle. But you know who's really scrambling right now?
The traditional tech players who completely missed the AI funding boat last quarter.
Exactly. We need to look at what they're panic buying next. Tomorrow's radar. I'm keeping my eyes glued to the Unilever boardroom tomorrow. McCormick throwing $42.7 billion at their food division is incredibly aggressive. I want to see if a competing bidder steps in.
A white knight for mayonnaise? Please? I'm watching the regulatory filings. You don't just consolidate that much of the global grocery aisle without someone in DC or Brussels asking very pointed questions.
I completely disagree. Unilever wants this low-margin distraction gone, and they'll take the money. But the real whisper on the street is the timeline. Buyers are suddenly dragging their feet on due diligence. Geopolitical volatility has everybody spooked.
Oh, come on. That's just a convenient excuse for bankers who missed their quarter. Look at the tech sector. Nobody is dragging their feet. Traditional M&A players are absolutely scrambling to buy AI-enabling tech right now.
Fair point. Tech FOMO is definitely a stronger market force than geopolitical anxiety.
Exactly. We'll see if that FOMO holds up tomorrow when the markets open. Catch you next time on Deal Street Daily.